So has the market lost FANG? And if so, how much worse could this selling get, Guy?
Yeah, of course. Yes, the market's lost. Absolutely has lost FANG. I mean, you lost Facebook and Google over the summer. I mean, you've seen Google go from basically $1,300 to where it's trading now. You saw Facebook go from $205 to $165 in 7 minutes on this show when they reported earnings. Now it's obviously much lower than that. You lost Netflix seemingly today, and you lost Amazon over the last couple days. So you've lost FANG 100%. How much worse can it get? You know, I said a couple weeks ago when the S&P was down 5.5%, I thought there was another 7 or 8% to the downside. I'll stand by that. So we probably have, I don't know, 2.5%, 3% left, and then we'll have a conversation. But it doesn't end. Today wasn't the crescendo that it ends on, in my opinion.
Yeah. Steve, what do you think?
You need fear. You need panic for a bottom.
Jack,
I think we've got. No, I don't think you have panic.
You think we have fear and panic?
Well, I don't think we've seen panic yet. I haven't seen it yet.
I think we have both.
I've seen guys asking where they step in and buy still. You don't want people asking where they buy.
But that last half hour today, or the last 15 minutes, let's say.
Started to get there.
Right.
Started to get there.
Yeah, what was that like on the floor?
It was getting a little panicky, but not throw them all out panic, not sell everything panic. You want to get a real flush where they're dumping everything.
But weren't they dumping everything at one point? I realized it all turned out kind of happy by the end of the day. Like, it's a big few. We had a V-shaped recovery on an intraday basis. By the way, why were we rallying so much this morning? We should get into that because I don't really understand where that came from. But bottom line here is I get the sense that this market, especially by 2:30, 3 o'clock in the afternoon, trading floors all over the city or all over the world were actually saying, oh, my God, it's actually happening because we don't see this. This does seem indiscriminate. Now, I realize that we've seen the machines push the market around now for how many years? Maybe a couple, to a point where people, I don't think, are reacting the way they might have on a day like today 2 or 3 years ago. But I think you're starting to see panic. And let's face it, you see a lot of stocks that are now at 2007 kind of first quarter levels, some all the way back to 2016. It's a lot uglier below the surface than it is on the indices.
I mean, the thing is that investors aren't just abandoning growth stocks. They're also not really going to value yet. I mean, we saw industrials really have a hard time in today's session, followed by, you know, this is after a month of sort of difficulties faced by that sector. So at what point do we find the leadership finally step in? We haven't gotten to that point, it feels like.
You got to test the February lows. You got to be at 25.32, right, at that level, and really see what people are made out of at that point. You don't want to see a little buy off the bottom on an intraday basis. You want to see them plummet them, close on the lows, and have people think overnight, what am I going to do tomorrow morning?
I mean, maybe
that's panic.
Well, maybe it's a good sign that we're not seeing money automatically rotate into some of these other sectors, although we're seeing it to some degree in automakers and home builders at this point.
We did.
In financials, sort of them too.
Sure. At one point, I looked at my screens and I started doing some of the numbers, and Ford was up, on a 3-day about 17%, GM 12. I don't know where we closed, but ultimately they gave a lot of today's move back, not the 3 days before it. But I just think when we saw the market turn, we saw every sector break down. We saw retail, we saw financials, which really, even after rallying 2% earlier in the day, we're still 10% below their 200 days. So to me, I just think technically, actually, the market does have a basis in fear right now, because I don't think that there's any technical support. Steve's talking about a very real level on the S&P. I agree with that. I think that's a level we probably have to test. So people are kind of like, hey, let's get it over with. But a day like today feels like people still don't know where it's going to land.
Well, it's interesting. And so that level that Steve said at 25.32, give or take, is about, 3.5%, 4%. So that sort of lines up with where my head is at. And we'll see if it happens. But it's interesting, when the machines that we all talk about take the market higher, we say the market's going up for fundamental reasons, which may or may not be true. I have no idea. But when the same machines sell it off and things go down faster than they go higher, we've had that conversation. It's because there's panic. You know what? I've said it many times. I'll say it again. You have panic buying as much as you have panic selling. You just never put the word ahead of buying because it seems to make sense.
It's called FOMO.
Whatever it is. But my point is, maybe the market's going down for the right reasons. And we've outlined the right reasons now for months. Finally, the market's trying to take a look. And the Fed is absolutely one of those reasons. But again, a lot of the tariff talk.
Then the question is it a buy at that 25.32? And that's the point, is that you want to see people reassess and say, okay, now I'm going to get back in. But just to say I've tested that level is not good enough. You want to see all those reasons. Is it going to hold? Is that what's pricing it in? And I don't believe it's priced in the worst.
Oh, I hate coming into a Monday when it's up, especially if it's down on a Friday, because it just feels like, all right, that's not going to be able to hold. Right. Yeah. It's just not going to be able to hold. And we did have a little bit of merger Monday with the Red Hat deal. but nothing else beside that. To me, it was very interesting, the Trump administration talking about tariffs again, and I don't know really why they did that. I'm wondering why they did that, because clearly the market doesn't like that kind of rhetoric, right? And so
did they leak that out, or was it? They didn't make a statement. It was just out there, right?
I don't know where it came from, but it was interesting to me because this president has chosen to use the stock market as a benchmark for his performance, and knowing that the stock market really hates these tariff discussions, it was surprising to me, especially 10 days before the election, 9 days, however many days.
Right.
That was, I don't know what that was.
I think
about.
he's just playing poker. I think it's another shot at trying to game it before to let President Xi know that he is serious. I think it was all.
But that's my issue, Steve, because I actually think that some of the fear for this market is coming from the fact that nobody sees a bottom. Nobody sees an end to this. And what came out today was, oh, wow. So not only are we going to slap 25% on these guys, but we're trying to come up with another list. Is there anything left? And for an administration that seems to be actually very proud of itself as it relates to trade tariff. I mean, we heard on press conferences today, president's done everything you asked him to do, including on the trade front, which means they feel like they actually could be vindicated on this no matter what happens. Meanwhile, look at the stock market, which we all know is part of where the scorecard is. And I point to small cap stocks again, which were the barometer for success. Let me just finish.
Trade has been a bipartisan issue, though. So that's the only issue with that is when you say. No, my point is, when you say, is it a win or not, why is he pushing it? It's a bipartisan issue. So I don't think it's flat out midterms.
My point is simply from the market scorecard. That's where I'm talking about. It's where my conversation was going to. The IWMs, which at one point were up 45% off the election, are now up 22% annualized over 2 years. Scorecard. Is that the best scorecard? I mean, 22% annualized over 2 years.
Cumulative or annualized?
Annualized.
So 22 annualized is decent.
No, I'm sorry. Cumulative.
Okay.
I mean about 11.5%, 12% annualized, which to me is nothing extraordinary for people that are saying, hey, look at the market. Well, after this major pullback, there's a lot of stocks that I would not be flying a flag and saying, hey, things are going so well based upon the performance of the stocks.
All right. For more on today's sell-off, let's bring in Rebecca Patterson with Bessemer Trust. She joins us on the Fast Line. Rebecca, thanks for joining us. Want you to weigh in on what we've seen, not just today, but, the past 7-8 trading sessions.
Yeah, I think you guys are giving a lot of good color on some of the technical parts of this. Let me try to pull it back to what I'd say is the fundamental. When President Trump got elected, we got a lot of stimulus. We got a lot of deregulation, incredibly business friendly. And then basically in April this year, we saw the U.S. market diverge from the rest of the world as trade went from little pieces and rhetoric to reality, especially with China. And the U.S. outperformance versus the rest of the world really started then. So here we are now, and inflation is coming through from a tight labor market, but there is now the potential for the trade to also cause inflation increases on top of the stimulus-created inflation. So the Fed is on a course to raise interest rates, keep inflation under control, at the same time that the rest of the world is getting hit more by a lot of factors, including trade, and slowing down. And so we've gone from reflation to fears of stagflation, and I think the market has been, over the last couple of weeks, pricing that in just in a very violent way.
Is that unfounded or is that founded, in your view?
Look, I think directionally it's founded, but I think the magnitude of this move, we can discuss whether this is panic or not, but when I look at a variety of metrics, we're seeing some of these sentiment metrics back at levels that we saw in the debt crisis of 2011 or even in the aftermath of 9/11. So in terms of risk appetite among investors, some of the levels we're seeing today suggest a huge dislocation, that global growth at 2.93%, GDP growth doesn't add up with risk appetite that's basically down to crisis levels. So I think the market technically short-term is oversold versus the economy, but directionally to have it reprice a bit is not shocking to me, given what's going on with trade and the impact on the rest of the world that's now feeding back into earnings guidance.
The headline that we saw, mid-afternoon, Rebecca, about the Trump administration possibly putting tariffs on the remaining goods coming from China, that really helped fuel the market sell-off. And does that change your view if that actually comes to fruition in terms of where you see the markets and where they should be going?
again, given the magnitude of this sell-off versus where the U.S. and the global economy are, I think a lot of bad news on the China trade war is discounted. But if we were to see President Xi and President Trump have a constructive dialogue in November, if we were to avoid this getting worse, I think you could see the market really love that. If you got a slightly softer tone from the Fed, we're watching data, we're aware of the financial markets, anything of that ilk, which I'm not looking for, but it's something to watch for. If you got that and China not worsening, maybe not getting better quickly, but not worsening from here, I think you'd have a stock market that's significantly higher. It's not our base case going into next year, but we still don't think this sell-off is the beginning of a recessionary sell-off. The economy is doing too well for that. I think this is a correction that's coming because the Fed suggested a slightly more aggressive path, and we're starting to feel more of the trade war here at home in the U.S. through earnings guidance.
Are you buying the pullback?
No, we're not. We are staying with the equity exposure we have. We are neutral versus what our clients would consider a long-term benchmark. So whatever their long-term allocation is, we're holding on to that. We're not reducing risk. And we have all of our portfolio managers looking for opportunities as things sell off. If there's a great company that they thought was too expensive before, they might do a little buying on this dip, but we're not looking to add risk at this juncture. We think we're late cycle, but we don't think this is the end of the cycle.
Rebecca, thank you. Appreciate it.
Thank
Rebecca
you.
Patterson
Thanks, everybody.
of Bessemer Trust. So two things stand out. Sticking to a neutral in the markets, not buying this dip per se, and also that much of the China bad news is priced into the market.
Yeah, that was the most important thing, I think. I agree.
You agree?
I agree. There's an asymmetry there. I think if they were to come to some sort of agreement, more to the upside. Yeah.
I think one of Rebecca's great points there was, though, the feedback loop that's coming back into U.S. earnings. Actually, so we're getting a response in U.S. earnings, even if it's just on guidance. And in terms of business confidence, that is actually a leading indicator because that's ultimately going to feed into CapEx. And I would just remind that the PMIs last week were awful. Germany printed at 52.7. This is the best economy in Europe, and it's one that hasn't been this level since 2016 first quarter. China reports private PMIs on Friday, expected 50. If it prints below that, that's a contracting economy, and that is something that people be very concerned about.
She named a couple of different things. She said trade, she said softer Fed, but what she didn't name is the other one, midterm elections. If the House doesn't flip, the Senate doesn't flip, that could be a huge tailwind to the economy.
Republican holds on both.
Republican holds, which people are just starting to say or chatter about that might be a possibility because all the polls have said the opposite.
Do you think that the markets are reflecting actually a Democrat
both
victory?
The House and the Senate?
No, I think they're reflecting the House. But out of the 24 seats that they need, they're protecting 12. And in the Senate, I don't think there's a chance of that flipping.
Yeah.
No, I think the midterm elections are a big deal. I think the president also has set up potentially losing one of the houses. And he has said, I mean, I'm paraphrasing, but he said, you know, your beautiful 401ks are all going to go away if you don't go out and vote Republican. So there are two fall guys or gals. One comes in the form of the Fed, which is easy for him to blame, and the other will come in the form of the midterm election. So if you're asking me, do I think it's over? No, I don't think it's over to the downside.